Yeah, I think diversification, having a business model that can weather all the different economical cycles is really important also for exchange groups. So like this year, first half of the year, we see the exchange business, the trading business and the IPO business being really on the low end, but we see our data business, our post-trade business doing really well. And we also have a payments business. So we have four businesses in our portfolio, which really helps us to deal with all kinds of different economical situations.
We spent a lot of time here in London looking at the demise of listings and equitisation on the London market. I'll just ask you a blatant question. Do you think that's a Europe-wide trend or a global stock exchange trend, or actually is it just that you think London's got a specific problem?
I think there is an overall trend of less IPOs across the globe. But there is an issue of competitiveness of Europe as a whole, not just London, not just Switzerland or Spain or the rest of the Europe. I think it's Europe as a whole compared to the US. And I think we in Europe need to group together and make sure our markets are as attractive as they are in other parts of the world, which they can and should be. So therefore, we have to work hard to make sure Europe as a whole is competitive. Infighting in Europe is not helping us. We need to work together to make sure the European region is competitive on the world arena.
Jos, good morning. Tanveer here. I just want to get in a quick check on how deal activity and deal flow is expected to pan out from China, because obviously you've had some Chinese listings. Do you see that trend continuing and getting stronger?
I think we have worked on a collaboration with the Shanghai and the Shenzhen Stock Exchange for many, many years, which then came to fruition last year. And that has really accelerated the Chinese companies who have an interest in growing their business in Europe, either by research, sales and marketing, or actually doing production in Europe. They've been looking at Switzerland as the right market for them to raise capital and to invest into their business. And that has been working really well, and I don't see any reason why that shouldn't continue. So we do expect more Chinese companies to list in Switzerland in the second half of the year and in the coming years.
Yes, but what about access to their financial accounts and transparency, as well as auditing of those financial accounts, which has been a contentious issue when these companies have tried to list in the US or the United Kingdom? How much have you engaged on that front, given your own standards of corporate governance and compliance in the same?
Yeah, of course, this is an important topic, that anybody who lists in Switzerland complies to all the standards that we have for all companies that list in Switzerland, including the Chinese. So that's why the project has taken quite a bit of time to make sure on the accounting standards, on the disclosure standards, on the auditing standards, that there is parity and that all the companies from China that list in Switzerland actually comply to the same standard as any Swiss or other international company. So that has been the biggest part of the work that we've done before we could make this happen, actually.